Hello stock traders, I hope all of you had a great weekend. Now we head into this new week and we have CPI data coming up. If we should see a surprise and see a lower inflation, I think everyone is expecting inflation to still be moving up, then it will really be key on which direction the market is going to be heading. And in today's video, I am going to talk about the overall market conditions, my view on them, and some levels to watch for within the VIX, and some different things that are going on as far as open gaps up and down on the SPY ETF. And I'm also going to talk about one fund, one 20-year treasury fund that you may want to take a look at. It has been falling and falling and falling and has hit this ridiculous level. And during bear markets, this particular fund does very well. But before I get going, if you could do me a favor, please hit that most amazing and wonderful like button. Also, if you haven't done so before, please subscribe and turn on those bell notifications so you get notified when a new video comes out. Okay, so yes, the market has not been pretty. There are some bad things that have been just kind of going on. And as we take a look here, this is the VIX. And when the VIX is spiking, it is bad for the stock market. There are certain levels that are really key to watch for. And this is where I want to start today in talking about the overall market conditions. And right now, we have the highest level of bearish sentiment in history. And so I don't know if this matches up, but some different things to watch for as far as the VIX goes. We want to watch that $38 level. This is going to be a level of rejection for the VIX if we should get up there. It typically does not hold above that very long. If we see panic selling, it could go as high as 46. Now, if we get to 46, I'm a big believer in buying up stocks at this level. This is a terrific value level that if we get up there, you may consider unloading up on some of those names that you believe in for long-term growth. So this is something to watch. It has been spiking on Thursday and Friday. It was at its highest the week previous here, but got beat down all the way down to this $29 level. It gets more bullish the further it goes down, so that's something to watch. But right now it is spiking, so that's something to also consider. Okay, so let's get into the SPY and let's start talking about some of these open different gaps that are going on. We have come on down here. We have opened up a new gap here. And so this is something something to watch here at 369, a new gap to the upside. So some things to watch for. This red line right here that I'm pointing out, this is June lows. And you can see how we bounced off of that. That was a level of support on Friday. And so coming down here in the morning, it will be interesting to see if we start to break below that level again. There's an open gap that is from forever ago all the way back in 2020. That is at 354. So that is a level of support that a lot of bulls may show up at. It shall be interesting to see if we fall down here. Now, if we get a positive CPI report, I would think that would surprise the market. Everyone's so pessimist right now. We could see a major bounce all the way to the 48 EMA and maybe even some of these upper levels here. And we could go on a bear market rally with that. And until we see higher highs and higher lows, I wouldn't be a believer in watching anything more than a bear market rally, but that would still be very welcome moving up in the market right now. Right now, I have a good amount of my money in cash on the sidelines. I am wanting to buy up panic level. I am wanting to buy up these panic levels, especially if we get to 46 on the VIX. I'm going to be a big buyer. Also, the other thing that's kind of going on, and I hate to say this because I love investing in insiders, but right now the insiders are not buying stock, and so that is a sign to me when that is happening that I'm putting cash on the sidelines and I'm waiting for a capitulation type event. And there is so little insider activity happening in this last week that it's very scary levels. We just haven't seen insiders for a while really pull back like this. There literally was nothing on Friday's SEC Form 4s that I could even take a look at that was any sort of bullishness at all. And so it's interesting to see. Right now I'm on the sidelines waiting to see what happens. You may think about doing sort of the same thing. We don't see this very often from insiders when there's nothing good and they don't feel confident in their company, and there just isn't anyone buying at the moment. Okay, so the stock I want to talk about, this is a stock that does really, really well in bearish markets. And so this is TLT. This is the iShares 20+ year Treasury bond ETF, and it is at very, very good value levels. It is down here around $100. And I think this is something that could really, really move upwards if this bear market should continue. And so this is something to consider, take a look at. It is a very, very good value. This is something that has been a lot higher in the past. You look at the 52-week high right here. I don't know if you can see this, but it's $155 right there. In that high right there. And so that is something, this is typically a fund that does a lot better than it's done. And so we should see a flight to safety in these, and this should move upwards with this bear market, especially if it continues. I wish I had more to report. I wish I had some bullish insiders to tell you some different stocks that I think is really going to move up 20, 30, 40, 50, 60%. But right now, there just isn't any. And when there isn't any, I have the discipline to stay on the sidelines. If a stock does not fit my strategy, I do not invest in it. I highly recommend that you take a look at the possibility of adding such a rule to your investing. If you are looking at a particular strategy, and I always invest with strategies in mind, my PDUFA run-up play, my analyst initiates coverage play, my changing fundamentals play, my insider swing play, my #1 stock trading strategy, my dividend long-term strategy. I have a strategy, and if stock doesn't fit that strategy, I don't get into it. I don't care who says it's going to move. That is how I've been successful in the stock market, and how I have averaged over 100% gains each and every year. Now, I've had my off years, and this is one of them. I'm down just slightly less than 1% right now. But investing that way, I have been able to turn a profit since 2006 of 100% on average. 2008 was very, very difficult, and I made a very small percentage of gains. But then we got to 2009 after the financial crisis, and I pulled off a 300% year in gains because the stock market recovered. And if you zoom out at the stock market, and this is another kind of point that I wanted to make, you zoom out at the stock market, what do you notice? This is going all the way back. Look, it's going back to 2015. You go back even further. What do you notice about this chart? As a rule, over time, it moves upwards. And that is the thing to kind of keep in mind during bearish times, that the stock market moves up. Yes, it has a long ways to fall. The stock market was in a very overbought position. This pullback is natural. We've had these in the past. But if you invest and have a solid strategy and you stick with it, you know, a good strategy, you will break even in these type of times. And that insider swing play of mine has done exactly that. Well, anyway, I hope all of you have a successful week. Reach out to me in the comment section down below. I do wish you all the best, and Raythoven out.